Yo, welcome to Muse News Crypto. I am Nate Muse. We're going to jump in and do some technical analysis at the end. Yes, 27K. We hit that with Bitcoin today. We're going to jump in and do a couple of news updates throughout the week, essentially a weekly review. We'll be doing those from time to time. So if you want to drop a subscription, like and subscribe, do all that good stuff, I appreciate you. But jumping right in, I'm going to go ahead and play a clip here of Janet Yellen from the meeting they had yesterday. So we'll jump right in here, just talking about the bank crashes and kind of how they apply.
Reserve and FDIC to protect all depositors of the two failed banks. On Monday morning, customers were able to access all of the money in their deposit accounts so they could make payroll and pay the bills. Shareholders and debt holders are not being protected by the government. Importantly, no taxpayer money is being used or put at risk with this action. Deposit protection is provided by the Deposit Insurance Fund, which is funded by fees on banks. Second, the Federal Reserve is providing additional support to the banking system with a new lending facility. This will help financial institutions meet the needs of all of their.
And I'll go ahead and stop it there. Yeah, so essentially, as you can read here, Wall Street banks, they're going to be putting $30 billion into First Republic, the next bank to potentially crash after the Silvergate bank crash, the Silicon Valley bank crash, as well as the Signature bank crash, and then obviously as well, one of the biggest crashes, top 30 bank in the world, Credit Suisse bank crash that they just got a bailout on, but I won't really get into that. If you want to follow me on Instagram, I do a lot of updates over there too. We talk about it there too. So anyways, yep, $30 billion to First Republic Bank, as you can see here. Essentially, the breakdown of it is B of A, Bank of America, Citigroup, JP Morgan Chase, Wells Fargo, all are going to put $5 billion each into First Republic, whereas Goldman Sachs, Morgan Stanley, they're each going to put $2.5 billion, ultimately $30 billion into those banks. So my opinion when it comes to that, not financial advice or anything, but Janet Yellen had put this out kind of as a positive piece, saying that, it should reinforce the strength of, banks and trust in banks and all that good stuff. But I don't personally think that printing so much money to create certain bailouts for other banks, and then having other banks kind of step in and back up First Republic here is necessarily saying that's a strong thing or a representation of, where our banking system is at in a positive manner. I mean, we can just look at the debt clock here, and we're at $31 trillion in debt right now. Not that that's, anything that necessarily can affect the average consumer in any way other than just the inflation that we deal with on a day-to-day with our goods and services. But definitely something to keep in mind that, the government is continuing to money and how that's going to affect us. But not, in my opinion, anything bullish for the US dollar. I think that's a lot more bullish for Bitcoin and crypto as a whole. All right. So moving on, anyways, 27,000 is what we hit today. First time we ever hit that in 10 months, given it just barely touched 27K and dropped back down to like 26.2, and it's been floating around there to 26.8 pretty much throughout the day. So we'll see if that consolidates or if it breaks out to 30K. We'll do a little TNA at the end, little technical analysis. So anyways, you saw the thumbnail, wasn't complete clickbait. Yes, Warren Buffett is still bearish on Bitcoin as a whole, doesn't believe in it, doesn't think it's going to really last, but obviously it's been outperforming lots of things, including gold year over year as far as store of value. So I don't think Berkshire Hathaway, his company, it's been around for a long, long time, is really much of a they're not in competition necessarily, but I don't think that Warren Buffett has too much of a leg to stand on to say that Bitcoin's going to go away. Seeing that Bitcoin as a whole is not even older than 15 years old, and its market cap being what it is pretty impressive, I would say. So, anyways, yeah, his company that he owns or backs significantly is Nubank. Essentially had gained 20% since January, whereas Bitcoin had risen almost 55% since then. So, take from that what you will. All in all, though, if we look here, Bitcoin is up 6% in the last 24 hours, whereas Nubank is up trading at $4.61 at 3% on the day. So take from that as what you will, but again, I don't think traditional finance really likes crypto. I don't think they really like the fact that it's continuing to go in a direction they never thought it would. So, anyways, moving on. Crypto bank linked failures is what they being a lot of the media thinks is fueling regulation, which I agree. I think that it's just opening eyes to the government, and they're seeing how many people that want to get their money out of banks are not very happy they can't get money out of banks, right? And they're using this as another, in my opinion, scapegoat to attack the crypto industry. But all in all, yeah, the crypto industry, as it says here, has been kind of hit with setbacks, scandals, high profile failures in recent months, aka FTX, and all the situations that have gone down with that. If you watch my last couple videos, I talked about Barry Silbert, his involvement in obviously his company Grayscale and DCG, couple companies that have stake in a lot of different companies, including CoinDesk and Coinbase and a lot of other businesses. If you want to go back and watch that a little bit further. But anyways, yes, I do believe that the bank collapses have sparked some additional interest in the government to continue to try to regulate and attack crypto and try to get their hands in it, right? So we'll do some updates on XRP and why I think XRP is actually in a pretty bullish situation with the government. John Deaton, their lawyer, if you get on Twitter and look it up a little bit, you'll see, if you haven't heard, that XRP is probably on the brink of winning their case against the government after a very long time. Very interesting, actually, XRP. He's the founder of XRP, actually has a lot to do with the beginning of crypto. So we'll see kind of what's to come with that. But anyways, moving on, FDIC denies report that Signature Bank buyer has to give up on crypto. Okay, so there were some reports that were sent out, a couple of anonymous sources here that were talking about how the FDIC told a certain individual, certain anonymous source, that it would not require divestment of crypto activities as part of the sale of Signature Bank. Signature Bank being a heavily pro-crypto bank, also one of the banks that recently crashed, blocked withdrawals for their consumers. This just based on what the government had to say as far as their business shutting down, their bank shutting down, right? So Barney Frank, if you've heard of the Frank-Dodd Act, he also believes that this is a very strong kind of anti-crypto message that the FDIC is putting out there. Again, FDIC is denying these claims, that they're not trying to put a block on crypto as far as the sale of the bank, crypto being involved in it, right? They have to have their hands off of crypto entirely, is what these accusations are saying that the FDIC is denying. So we'll see kind of what's to come with that. But anyways, moving on, if you have not heard, and you're probably wondering, what am I talking about? You've probably heard a lot about these crypto crashes and maybe don't know fully kind of what started them, but essentially SVB, Silicon Valley Bank, heavily involved in the tech space, startup space, had assets of around $209 billion that weren't liquid, right? So when there was beginning talks of their bonds, essentially here we're talking about US Treasury bonds that were kind of being eroded by the fact that the value of them had dipped significantly and users went to do their withdrawals, right? And that equated to $42 billion this last Thursday that SVB, Silicon Valley Bank, couldn't come liquid on, right? They had the assets, but they only had about $900 million in liquid assets, hence why the halt on funds happened. So take from that what you will as far as the trust on the traditional banking system that our gal, Ms. Yellen, was talking about being a positive thing for the industry. I don't think the fact that you can't take your funds out of the bank is a very positive thing. I also think that the FDIC saying they're going to cover the funds, but not more than $250,000 a user, is a very bullish thing for the banking industry and potentially why crypto is kind of taking off right now. So anyways, moving on here, this article talks about how the US debt default has tripled as far as possibility of completely collapsing, not collapsing, but defaulting in general. So see kind of what's to come from that as well. But they being the government, are working on taking extraordinary measures. If you've heard of QE, quantitative, completely drew a brain fart, but essentially the government trying to dictate, making sure that inflation is not outrunning other factors to ensure that their idea of the financial system is in the correct direction in layman's terms. Okay, so anyways, positive news, Ethereum update, Shanghai, set date on it, April 12th. I mean, that's huge. There's been locked funds for people that have been staking their funds on the Ethereum blockchain. 229 billion, to be exact, of people that have been staking their Ether. 17.5 million of Ethereum has been staked for quite a while that people have not been able to access. So this new update with Shanghai essentially is going to allow people to access their funds. Henry Elder, he's the head of decentralized finance at Wave Digital Assets, it says here. He doubts that the withdrawals that will happen, there will be a surge of withdrawals that won't necessarily impact Ethereum as a whole, he feels. Again, not financial advice, but he does believe there will be a short-term disruption of Ethereum prices as the market tries to decipher withdrawal data. Okay, so take from that what you will, but I do think it's a positive thing for Ethereum. People have been waiting for this for a very long time. So anyways, a little bit of TA. This was my trend line last night before we hit 27K, which happened today. So we'll see kind of what's to happen over the next day and a half or so. We did have a get a little crappy line drawn here. We did have a little bit of this is a horrible line, but that's okay. A little bit of a reverse head and shoulders that was going to happen, but that did happen. That was either going to put us right about at 26K, which we did break right there. We had a little reverse head and shoulders, like I was saying. I'll draw a crappy line that just disappeared. But anyways, imagine that's a three-peak line that's essentially hitting this line here. And yeah, we broke past that, and we were potentially going to see a downside down to 22, but we are pumping up to 28 potentially if we can get up here in this range right at about 28, 28.5 and break past that trend line, that new trend line, then we might be on the way to 30K. My opinion, again, not financial advice. If we pump too quickly to 30K, we might see a bull trap. So anyways, thank you so much for watching. Drop a subscription, like, comment if you want me to touch on any other topics, and you have a great night.